Hey traders and investors, it's Wednesday, October 15th in the evening around 4:10 p.m. Taking a look at the charts for the day, we had equities. They posted a pretty good gain. They gapped higher this morning at the opening bell, which we were talking about this morning, how probably that gap is going to get faded and sold into. I'm not a fan when the market gaps above short-term resistance. We did see that the market, a little run up of FOMO in the morning. So the market gapped higher above resistance. A lot of people got bullish. We saw that with our FOMO indicator breaking the blue line, and then suddenly the bout of selling stepped in. We saw that same over here. We had a full day of FOMO over here. And of course that created a big drop right after. And so the markets are just ping-ponging around between pure panic selling and panic buying of FOMO, missing out, back and forth. So we got lots of price action today. If we look at the 10-minute chart, we had been talking about the price spikes, how the previous session we came up, we had 1, 2, 3 price spikes. We talked about this one this morning in the morning video. The market came down, hit 1, 2, and 3 price spikes. Again, it gapped higher. It did have a little bit of a pop and squeeze, and then it came fizzled right back down. And now it's kind of right back into kind of resistance area right through here. You can see these gray bars in the background. This is volume by price. This is where the majority of volume is traded over the past 2 trading sessions. Typically, it's going to be a sticky spot for the market to try to break. If it's underneath it, it generally kind of wants to get to the upper end of the range, but it probably gets stalled there. And then if you're above it, it should want to come down and find support, usually right near kind of where it actually starts to fade back. It's not usually where the heart of the volume is. I'll do a video at some point explaining where the targets are when you look at volume by price. But anyways, we have the markets trying to figure out what they're going to do. When we look at the bigger picture, we look at the SP 500, we have a trend change going on. It's very similar to potentially this one here. In fact, we had a trend change over here, but the market recovered and muscled its way up and got us back in for this next trade that we've just closed out. When we look at the sentiment chart of the markets, we do have this phase where the markets were pushing to all-time highs, but money moving out. We're in the same boat right now, and the big question is this just a pause before we get before the hammer drops, and we start to see this potentially pick up speed to the downside? So overall, if we go and we take a look at the rest of the market, where the money was flowing today, utilities on fire again, screaming higher, dramatically outperforming the stock market. Obviously, this is a red flag. We've talked about this for the past couple of weeks, that this is a warning sign that usually more bad prices coming for the stock market. Eventually, utilities will get hit with it, but they will outperform until that turning point hits. Let's take a look at gold. Obviously, gold, silver pushing higher again. It's in that phase where it really doesn't matter what the stock market does. The stock market starts to struggle and roll over. Gold wants to keep pushing up as the defensive play. If the stock market goes up, people are still gravitating to gold and silver because it's performing so well. People chase money. They chase big movements. So they're in that perfect storm where you just let them do their thing. Look at the volume. It just keeps ramping up and the price keeps going higher. I mean, it's exactly what every precious metal trader and anyone with a position on wants to see. This is a bullish sign, and the question is just when will it reach some capitulation? We had a question about silver. One of the members was wondering, it's broken the $50 mark. When are we getting in? Where's the new buy trigger after $50? I don't think I said there was going to be a buy signal after $50. I just said if it breaks and holds above 50, it could shoot a whole lot higher. Again, we've got the same scenario. Everyone's piling in, big volume, prices going up, and the question is, where's the top? But I am not looking to buy silver here. I think people who are saying to buy silver here, I think are extreme, gold bugs, silver bugs, and, wanting it to go a whole lot higher. But from a technical standpoint and just pure risk management, if you remove the fiat kind of climate scenario we're in, you remove all that stuff, you look at price action. Price action to me says you're chasing price right here. We're already long. Well, if you're long precious metals, which you should have been from a long time ago, you should be enjoying this, not looking to buy up here. That's the way I see it. Again, we did close out our gold trade right over here on this peak, right at this peak over here. That was a pure short-term trade. Get in and get done. That's it. Hit our targets. over and out. And long-term investments, you still want to be long precious metal phase. As we know, it can continue to muscle its way higher for potentially several weeks or even potentially a couple of months, depending on how things unfold. Now, some of you wanted me to overlay the dollar with gold and with the stock market. So let's take a look at the dollar here. The yellow line is the dollar. The chart itself is gold. Let's just go back here and just take a look at what can happen in different times. So you will notice the dollar can move up, gold can move up together. They can both actually fizzle sideways. We can see the dollar go down and gold go up. We can also see more or less gold and the dollar rally together. And if we just fast forward to where we are right now, we just zoom in a bit more here, you can see here we have more or less the dollar rallying and we have gold rallying together. So you never know when they're going to decouple. So many people just think they go opposite directions always, and that is definitely not the case. You cannot, just like financial advisors say bonds are a safe play, just hold bonds if the stock market falls. I mean, you can't, just because something's done it in the past, you can't rely on that. The markets change, they live and breathe. That's why we look at every asset class, stocks, bonds, currency, as its own trade. Who cares what the relationship is? We just want to know what it is doing and does it meet our trading criteria to own the dollar or to not own it or vice versa, all of that stuff. So let's take a look at that with the SPY, because I know some of you want to see how the dollar moves with the SPY. In financial crisis, we tend to see the dollar move up. Now, depending on the scenario, again, nothing is ever certain in the stock market. That's why I can't stand people who say, this is going here for sure. This is a sure thing, because there is no sure thing. You have a good odds or good probability, but you can see the dollar, the yellow line fell here, and we saw the stock market sell off. Now, obviously, this had to do with tariffs. This was the tariff crash, and if it's going to hurt America, it could hurt the dollar. So we saw the dollar and stocks fall. And sometimes they will go in opposite directions. Sometimes we'll see the stock market, move higher and the dollar go lower. Other times we can see the stock market rally and we can see the dollar rally. Again, none of these things are set in stone. I think too many people put weightings on relationships like this, and they don't need to be that way. Or they shouldn't be that way, because they're independent investments and assets that do their own thing. Again, if we take a look at the 2007, which is this chart over here, this is 2007, the S&P 500 daily chart. The yellow line now is gold. This is when the stock market put in a major top, and gold itself kept pushing higher. We're in a very similar scenario. We just don't know when these trends are going to end in terms of the long-term trends. And you can see the stock market started to top and break down and sell off. You can see the stock market dropping substantially and money piled into gold. It came out of stocks, went into gold. Eventually, the stock market started to really break down, lost its momentum. It started to pull gold, and gold sold off 34%. So I think we're getting very close to this scenario. The stock market could start to struggle here, could roll over. We could see gold, silver, and miners push higher, including platinum and palladium potentially. And then we kind of go into this type of phase over here where the stock market starts to work itself down and struggle. Gold, silver keep going higher. And then eventually when this starts to break down, things get ugly. That will really pull gold, silver, and down with it. But we could still see a very strong pop and rally in the precious metals space. We're in an uptrend. We just know eventually it will reverse. And the key is to be able to identify and be able to know when to take charge and protect our capital. Now, for those of you who want to do that, I know a lot of people just want to buy and hold gold, and it was just perfectly fine. I'm just talking from a technical trading standpoint. I don't buy into news and all of the economic data. I know how that works. It doesn't work out very well. It's why precious metals have been a dead asset. They go dead for decades at a time, 5-7 years here and there. Even though the scenario is perfect, price still, you got to follow price, or else you're going to have big periods of no performance and all of that. One of you wanted to see the dividend space. So this is the S&P 500 high dividend stocks, obviously nowhere near all-time highs. It's kind of been stair-stepping its way down. Money doesn't seem to want to be going into these big blue chips. They want to go into small caps. You look at these big companies, and then you drop over to the Russell 2000. completely different story. It's just pushing higher, hitting some highs. So definitely money is not interested in the big boring stocks. Everybody wants in the growth and aggressive stocks, and that is the feeding frenzy kind of phase we're in, the euphoric phase for small caps and precious metals right now. And if we take a look at the 30-minute chart, we can see our trend analysis here where the market was in an uptrend. The trend eventually got oversold. It then went neutral, and then it's gone into a downtrend. And you can see these red shaded backgrounds behind the bars. These are overbought market conditions. This is what I show in my book, Technical Trading Mastery, how to identify the trends, how to know when something's overbought and likely to roll over. Also FOMO, this is when the bars are red, when the trend is down, you're generally looking for overbought market conditions or FOMO. And put the two together, you can usually get a pretty strong move to the downside. And that's what we saw back over here. So that's kind of where the dividend space is. Definitely struggling. It's oversold here, and now it's having a bounce and ripping higher, which kind of negates these short-term ones. When it gets super oversold, you're kind of looking for a bigger bounce, not a tiny little bounce down here. Although you still do get these tiny little moves in price action when you do get these waves of FOMO on the chart. So we have a member talking about he's got his money stuck in a Canadian TFSA and RSP, which is like a retirement account, wondering what he can do because he can't change the currency. And he brought up DLR, which is the dollar. It's a Canadian listed ETF that gives you access to the movement of the dollar. So this is a way that you could, if the dollar is going to continue to go higher, when we're in cash, you could move into DLR and look for this eventually to continue to push higher and generate a return there. It also pays out some dividends. Nothing huge, but it does pay out dividends, I can see, every few months. A few of you have been talking about XLE, or more so the ERY, the inverse discretionary trade setup. This is something we've been following for a long time. The energy space has been moving up. It did finally have a crack to the downside. It's been working itself up into resistance. It does starting to look like it wants to roll over. We do have a sell signal on the market to get out as a trend for the general stock market itself. This could have the potential to roll over here. Now, I'm not jumping into it right at the moment. I'm not looking to put on a discretionary trade right now, but I do like it. It does look good. I'm going to give the markets another couple of days to see how things unfold. When we go back and just look at the stock market itself, there's some pretty funky price action going on, and I'm not looking to stick my neck out right at the moment to get into a trade. If we do go into a big sell-off, eventually there's going to be some very good opportunities, potentially an ERY, potentially in an inverse real estate one, as we've talked about, and a member shared that the other day. Huge potential on both of those, but it doesn't mean we always have to try and get right at the top. Again, a discretionary trade for me, it really has to really click. It has to look and feel right, and the timing of the overall market scenario. And we've just got some interesting volatility here that it could pop and drop very big. It feels more random right now, and I'm not a big fan of jumping into something when it kind of feels like a coin toss, which is why we're waiting to see what's going to happen, and we're protecting our capital right now. Last but not least, let's take a look at platinum, palladium, and a blended ETF. So we can see platinum holding up in a flag here. It's kind of doing a bit of a running correction, but it could pop and extend at any point. If we look at palladium, we've got very big run, explosive move. Obviously, we also have silver, which we've already covered. And a way to play this, we've talked about many times, is GLTR. This is a basket of precious metals. You don't just have to pick one and hope you pick the best one. This one gives you gold, silver, platinum, and palladium, pretty much in that weighting as well. So it's mostly weighted with gold. Then it has a bunch of silver, then it has a little bit of platinum, and it has a little bit of palladium. So you kind of get the benefit of all those. And this is something we've talked about for a while. We actually talked about it back over here. If you didn't want to just pick gold, you could get into GLTR. I don't know what it has moved from the entry price, but it's a pretty nice move for a very used to have almost no volume, and now it is going parabolic. So this type of price action, again, locking in partial profits is never a bad thing. Selling off some position, locking in gains. I know a lot of people have multiple same positions. If you own gold, if you own silver, if you own GLTR, if you own gold miners, they're all the same trade. They're all precious metals. they're all going to rally together. And then when the market turns around, they all collapse together. So, trimming off profits in some of them as they mature and have parabolic spikes is something that I always do. And it works out very well versus watching, everything go up and then everything tank and you get out of a whole bunch of them at the same time versus just slowly streaming out, locking in gains, moving up your stops in a controlled way. And again, I don't care how high something goes. If I sell out before, depending on the type of trade, before it actually peaks, I don't freak out. I know most things will always come back to some regard and give us an opportunity, whether it's at a higher price, but it's built out a launch pad to go much higher, or if it's at a lower price, there's always going to be more trades. And that's what I think a lot of traders feel like they're going to miss the train and never be able to get back in. That's part of the reason why you get this big move we're having is people, I think, are heavy on that. And it just will show eventually in trading results long term. If you've got decades or years, many years of no returns or big losses, that's because you fall in love with the trade and you feel like if you get out, you're not going to get back in at a good price. That's just part of that's just the way you trade. It will show up in your trading account value versus consistently pulling money out, rotating to a new asset. You don't really care what you own. You just want it to be going up and you're pretty happy with that. Anyways, that's it for now. We'll talk to you soon. Bye-bye.